Good day, ladies and gentlemen. Welcome back. What if I can teach you today, or tell you today, that you don't need to know how to draw trend lines, use any indicators, don't know whether the market goes up or down, but there is one specific way that anyone with no experience, it's something so simple to line it out, and it plays out more than 80% of the time. If that sounds good to you, stick around, and I'm going to take you through what happened on NFP and how you could have made an 8 to 1 easily on NFP day, walk away, money in the bag, and had a great weekend, where other people were just trying their luck on both sides of the market and lost a lot of money. I'll see you right after this intro, and I'm going to take you through how I made money on NFP. Okay, welcome back. All right, what I've got here in front of me, and I need to take a step back on the daily. And this is not a here we go, we're going to go through a lot of analysis. We're not going to. I just want to show you guys why it is such a high probability trade, and you don't need to know all of this. I'm just showing you guys what I've done on the day. So in my analysis, we spoke about fair value gaps that gets inverted, which obviously gives us some bearish movement. And if you just look at the last, couple of days, market break structure to the downside, inverting this fair value gap. And my next idea of trading is when I see something like that, I'm looking for the next candle at the daily open, and I'll draw a line, extend it through my chart, and I'll wait for the price to trade above that open line. And then I'll look for shorts to take it down to at least target that previous day's low. And the same with the next. And that's how I went into NFP. This large black candle here, that's Friday's candle. And you can see there was that little wick to the upside, which is the manipulation before it draw price lower. So what I'm going to do now is I'm going to jump to a 1 minute chart, and I'm going to explain to you guys how it works there, how it works out on a 1 minute chart. Basically what happens here, there was news coming out, and in this, when the market opened here, price were going up, down, and then aggressively sold off. Everybody that was gambling was saying market's going down, so let's short it. And then the market turned around and stop them out, and then run up all the way to the top here. By that time, some people jump in again and obviously put their stops below here, and vice versa. So at the end of the day, what this big candle means is there was a big manipulation to the top side, to the bottom side, but with all of that leaves liquidity above this candle and below this candle. And at some point, the market's going to reach out for both sides of the candle to run liquidity. So first thing that you do on every single day or every single week to plan your week is you would go to, you can use Forex Factory. It's a good site to tell you where all the red folder news is. And all you got to do is, now if there's no red folder news, there's no need for you to come and trade. So Monday, Tuesday, nothing's happening. So you got a long weekend till Wednesday. If you want to trade a strategy, you don't need to even look at the market on a Monday and a Tuesday. Wednesday come, you can see there's some red folder news. Don't mind the times. I'm in a different time zone, so that's why you'll see this is probably the AM session. But there's some red folder news. So for a fact, okay, so Wednesday I need to be in front of my charts, and Thursday. And there's only 2 days next week, or this upcoming week, that you're going to come to the charts to look for the strategy. Okay, so now you know this, but last week you would have known on Friday there's NFP. All right, next step, what you do is you would go to your chart. And like I said, I've got a bearish, idea that market goes lower. So I would have gone and looked for the beginning of the day and just extend the hour through. Let me just see if that's right. Sorry, got to get this right? Which is right up there. Okay. So all you got to do now is you've extended. You don't look at the market. There the market went above it. I've got a bearish, opinion, and it sells off. So if I was a gambler, I would have most probably tried to short there, and I would have made decent profit there. But most of us, traders are new to the market and is greedy and looking for equal lows on this side, and analysis paralysis. I'm saying to you, only thing you got to do is mark out the high and the low. And the reason you do this is because that is liquidity. So let's just call this buy side, and we call, I'll just do this, and we call this one sell side. All right, and let's do this one in the center. So now you've got the daily open. You know there's some big news coming out. You know you need to be in front of the your computer about 8:30 to see what's happening, and sure enough it creates two nice big wicks. You know it's a news day, so there's definitely liquidity on both ends of those wicks. Your objective for today is if we take whichever, this could have gone below first, take the sell side first, then you would look for the opposite of what I'm going to tell you now. But in this case, it played in my favor, and it actually said, okay, I said I'm bearish. It went above the opening price. It took that liquidity out, and then I'm looking for an entry model. My entry model is obviously inverted fair value gaps, anything in discount and premium. And I'm going to show you there was one losing entry here, and then there was two winning entries. So the very first entry was this fair value gap that got inverted here, but unfortunately when this little candle, let me just change this or make it bigger, but unfortunately when this little candle with the little wick here, this one here, when that candle broke the top side and closed above it, that was a losing trade to me. But then the market wanted to run liquidity again, so it just had to run some other highs, and I'm just going to mark it out. But this is not where it needs to be complicated, for you. I'm just marking this out so you can see it. So there was some buy side that got run here again, and sure enough, it created another fair value gap or an IFVG. And let's mark it out, and let's call it the IFVG. IFVG stands for inverted fair value gap. So basically, it ran up, it inverted, and that is where your entry was. So here we had an entry on the test. I would normally look for a test here, and I would have put my stop probably by the swing point, but I got stopped earlier. And obviously target the lows, but that was a losing trade. So we had one loss there, but then again, I'll wait for the test. It was there, and I would put it just above there. And what did I do? You go down and target those swing low, and it got taken there. That was a 9.5. So that was the one trade. Then the second one is if there are people out there that trades Fibonacci's, you could have taken this one here, but this one was the entry where it literally displays through all of this down. And look what it does. It's still above the red line. The red line is the daily open. And then it went all the way up to that IFVG on top. And let me just move this one just a little bit to that side. Tested it there on a 75% retracement. Rejected. You could have waited for the rejection. You're still in a place above to sell. And you could have taken a short here. And say you took your short at the 50%. Which is a good place if you really want to, and you would have put your stop above there, and that would have given you an easy 5-to-1. And all it did was it was just moving lower, 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 eventually spiked through it, and then obviously it continued lower. But the strategy is you wait for red fall the news days, you wait for the action to come and manipulate the market and run with these big wicks. If it was a smaller wick, you do the exact same thing. And normally what you would see, and I'll create another scenario for you guys now, but you mark out the highs. So you look at the red for the news, you know that day. So Wednesday, you know there's red for the news. Wednesday, and I think it's again at 8:30, you go to the charts, you wait for the news to come out, regardless if it goes up or down, or just make one wick, or make two wicks like this. You mark out the wick, and then you see what the market does. If it only created one wick, and the market went there, then it's a no trade because there's no other wick here. So you're not going to create or mark out the low of the body here, because if there's lower lows, yeah, it might go down, but the trick is that this thing must give you wicks, or if it creates a wick only to the downside and then carries on higher, yes, then you target the wick where liquidity has not gone to yet. So then you just sit back and you wait for your entry, but you need to have an entry for this. If you don't have or know entry model, maybe just pop some comments below in this video, and I can obviously take you through how to trade the fair value gap or inverted fair value gap, or Fibonacci is the simplest one. It's just waiting for the retracement to above 50% of the swing, and that's where you short it, and off you go. If you really wanted, you could have taken the swing range from there to there, and that would have been a 50% as well. Then if you're more advanced, knowing about order blocks and propulsion blocks and all of that, I mean, that up candle is order block, that's a propulsion block. You could have waited for the stab into that big white candle. That could have been an entry as well. But the one entry that's always good is the fair value gap. Normally when it runs the highs, it creates a fair value gap. If it inverts, then you can look at entries at a 50% or the test of it, or just as the body closes, that's where you enter and you put your stop up here. But the minute one of these candles close above the inverted fair value gap, I normally just close the trade, because that most likely wants to run higher, which in fact this thing did. It ran higher and my risk was capped here and not there. So I just waited for a new fair value gap to form, gets inverted, sold right there at the bottom of the fair value gap. I think I've had another entry at a 50% because I split my entries, but that's not the point. The point is it got inverted. That's my entry. I wait for the test, and that was very close to the the close of that candle. I put my stop loss there. I monitor it. I saw the displacement. I saw the rejection, and the market starts dropping. When the market started to drop, I moved my my stop loss to break even, and I literally put my profit target down below, and I walked away. And if it stopped me out, that's fine, and that would have just cost me nothing. And but the fact is, this just keep going lower, and it actually managed to run those sell side. All right, so that in a nutshell is the strategy. It helps if you've got a daily bias. I'm going to make what I'm going to do is I'm going to make a video, which I will link to this once I'm done, where I'm going to take you step by step how to get a daily bias, and that will normally help. If you expect price to go lower and there's a wick on both sides, the top side runs first, the probability that we still want to go lower is much higher. And but if this thing ran the sell side first, I would still, regardless if I was bearish, I would have still looked for any buy entries to take it to the top. That's what you got to do with this. You don't have to, if it goes lower, it's like, now I'm actually bearish, so I don't know if I want to trade it. This is the strategy. You got to stick to it. If it runs the one side first, you target the other side. If this thing only creates one wick and the market go the opposite direction, then you target that wick's top side. If it forms a wick and it just runs up, then it's no trade. Then rather wait for 2 wicks. The wicks is where the damage is, and that's where the the secret sits to this. So let me know in the comments below if you like this video, if you find any value from it, if you need anything further to this, and I will gladly make another video to explain, or I'll reach out to you personally and I can take you through this. And what I'm going to do is, going forward, I will mark this out, especially this week on Wednesday and Thursday, the news events that's going to take place. I will mark the wicks out. If there's no wicks, then there's no trade, but I'll mark it out. I'll make a video. You guys see what this video is all about, and I will record it and I'll post it. And if I've got time, I would obviously set up notifications to trade it live, so you guys can see it live in a live session how it all works. This thing was a plus type of setup to take profit. Other times it looks fairly different, but if you put the work into to trade these things and go and backtest all of the red folder news, you'll see that that's how it normally plays out. Sometimes it goes to the top side, to the bottom in 2 or 3 candles, and sometimes it takes longer, like this one. But this is a minute candle, and this, what was this? This started here, this probably a 30-minute trade, and then you were done for a decent, at least 8-to-1 trade. All right, guys, I'm going to leave you with that, and hope you find some info or some value here. Just like and subscribe and set the the notification bell, and I'll make more videos explaining this. And there's a series of videos that's coming that's going to explain my top-down analysis in a very simple way for you to profit from. Take care, and I'll speak to you guys again. Bye-bye.